It is the morning of April 25th. Let's do an update on Bitcoin's chart and make sure we know what levels we should be paying attention to as price continues to move forward. Now, this is Bitcoin on the daily time frame. Yesterday, when we started our morning update, it looked like we were getting a lot more bearish price action here at first, and it looked like we could potentially head down to where we have a ton of strong support at $88,500. But as the day went on, we made another update video that said this daily candle was showing a lot more resilience than what we saw in the morning, and that if we got above $93.5 thousand, which is right where this magenta line is, which is a line of resistance, going all the way back on Bitcoin's chart to 2021, you could look to see us turn that into a quick support and head up to the next key level we need to keep our eyes on, which is this red line. This red line comes from our Fibonacci retracement tool, which is what gives us all these rainbow type colors, right, in the background and these additional lines of support and resistance. And this red line is basically the tippy top, not the top. It's the second top level. It's sitting right at $96,000 and should be an area of resistance. You can see in the last Fibonacci retracement line, which is this one, we used perfectly as a springboard to get that massive daily candle we had here. So you're going to want to keep your eyes on $96,000 because it should be a pretty stiff area of resistance, but if we can get above it, could also act as an additional trampoline forward. However, as we are looking at this pattern, this does look like the fifth and final wave upwards of an Elliott wave theory move, albeit put an asterisk on that. I'm still trying to get better at Elliott wave theory, where it says that price action moves in waves of 5. So you have wave 1, wave 2, wave 3, wave 4, and then wave 5. And wave 5 is always just a little bit higher than your third wave. Afterwards, you tend to get a correction. Timing that with the top line of our Fibonacci retracement tool, it does seem likely, and we're very separated from key areas of support in our exponential moving averages. But keep your eyes on, again, that 96K level. If we turn that into support, it could keep going further, right? If it becomes hard resistance, we could have that ABC correction, okay? Other things to keep your eyes on as well is if we were to fall right here just below 92,000, or pretty much like 91.7, could be support. We also have a ton of support here at 88.5K and also $88,000 that could all catch us, particularly as a few days go by. These exponential moving averages will move up into this range and potentially act as support as well to establish maybe a higher bottom from this point here. So keep your eyes on all of those levels. The big thing to keep your eyes on if we do get a more sustained correction downwards is this orange line, the 200-day exponential moving average. All you need to know is that line is an incredibly important line of resistance and support to stay above. If you're in a bull market, you're above it. If you're in a bear market, you're below it. If we come all the way down and start to challenge this again in that like mid to upper 80K range, really keep your eyes on that, because if we break it, there could be some danger ahead. But we're neither here nor there. We're not close to it. It's just something to have on your radar screen. But again, this possibility is still possible on the charts. This ABC correction has still not been invalidated, even if we hit 96K. Just be aware of that. That's why I want to make sure you have that 200-day exponential moving average on your radar screen to pay attention to, despite there being some other levels higher up in that upper 80K range that could result in us having a pretty damn higher low. Regarding the spot Bitcoin ETF products from yesterday, we had $442 million of inflows come in, the fourth day in a row of really, really solid, super strong inflows for Bitcoin from the spot Bitcoin ETF products. Again, if this continues, this could really be the driver to make Bitcoin truly decouple from the stock market and start to do something kind of like what gold has been doing. And to close out the video, I do want to provide a little bit of a warning with the stock market, because we have these gaps on the chart. You can see a gap here on the daily time frame, a gap here on the daily time frame. This yellow line and this light green line are gaps that exist on the 4-hour time frame, okay? Gaps on the daily chart are far more impactful. It looks like the stock market wants to move up and close this gap, quite possibly move up, close this gap as well, and then it's going to hit its 200-day exponential moving average. More likely than not, simply because you have a gap here and another gap further down, this is most likely going to act as hard resistance, and you're going to have the stock market get rejected from that. That is what I believe. However, again, just keep your eyes on that 200-day EMA. If we can get above it and turn it into support, the stock market could have a sustained rally. But these gaps should worry you. The stock market has an even higher degree of filling gaps than the crypto market does, so keep that in mind. And I think the stock market should move up higher because China did release a statement that they're looking to provide some exemptions for specific U.S. goods coming into China regarding their 125% tariff. So we should see a good bump in markets, and we're starting to see that good bump reflected in crypto before the stock market opens up. Hope you have a good day. That is